Hello, Mark Sturdy here with highlights of 7 Days Ahead's weekly technical analysis, week beginning May the 4th, 2022. Let's look at the summary. You'll see that actually we've pulled our horns in. We remain bearers of the yen against the dollar, but the big and interesting change is the absence of bull dollar bear euro, bull dollar bear sterling positions here. And we'll investigate that and look at the dollar euro as to why we've changed our view on that. The stocks, we are out of it, but that too is disguising a situation full of interest and possible excitement in both the Eurostoxx 50 and the S&P 500, a potential bearishness. So we'll look quite closely at the S&P 500 on that. We remain big bulls of the yields in across the board, bearish of prices. That continues much as before. In the oil, we're flat, watching a consolidation going sideways, a triangular consolidation, but no possible breakout at the moment. Gold, we are going to look at in detail because it's a change. We are now bearish short term in gold. Those full of bear potential, depending on the close on the week in the gold, and therefore it might become an interesting vulnerable. It is an interesting vulnerable situation. Anyway, let's look at dollar euro, and the reason for our change in bull dollar stance is that the dollar has strengthened so much that it's come down to these levels between 103 and 110, close to the bottom of this very wide trading range since 2015, between 120.50, or rather 120. It's not clear, is it? 123.28 at the top, and 103, between 123 and 103 at the bottom. We're right at the bottom of this trading range. Look at the weekly chart. The trend is continuing of dollar strength, but because we're so close to this, we are pulling our horns in and would want to have a confirmed monthly close beneath 103.40 before we were to renew our dollar bullishness and bear currency. So as I say, the trend is continuing. It may yet go further. There is a slight pause in the day chart. So we are, for the moment, not buying the dollar at these levels. It's come very far, very fast, and we would go square and wait, as I say, for a close beneath this 103.40 level. The same goes in similar fashion in the cable. The dollar yen slightly different because that's gone so fast. It's broken prior highs, and so we remain bearish of the yen. Sterling euro is not very exciting. It's still stuck at the top of the trading range. Let's move to stocks. As I say, we are out of stocks, but this deceives because underneath we have no strong views right now, but it's full of potential. Let's look at the S&P 500. Here is the consolidation pullback in the long-term charts. Here is the situation in the weekly chart, whereby the market looks as if it's broken down through 42.40 or 38 here last week, having bounced. And we now need a close beneath this low here, 41.01 or 40.94 in the June contract. A close beneath that, I think, would be very bearish. No question about it. We'd be looking to move down to 3,500. So we are on the cusp of something exciting, potentially. Mind you, were the market to bounce here and remain within the trading range, then many other possibilities would arise. However, do watch this level, 40.94 in the S&P, and there are appropriate and similar levels we've pointed out in the other markets, particularly Eurostoxx 50, which is the next most vulnerable. FTSE is right at the top, not far from its all-time highs still, and the Nikkei 225 is sidelined. We remain, as I think I said, bull of yields across here, not very exciting. I want to go straight to gold, really, which is the other interesting thing that's happened this week. Let's look at gold, and here we have a potential large change. It hasn't happened yet, but we've gone square on it, having been quite bullish only a few weeks ago. And if we look at the monthly gold, we have the situation here of the market pausing at the prior high established in 2011 and trying once to get above it, and looks possibly to be on the verge of failing twice, which would be rather bearish, no question about it. Obviously, it depends on the close at the end of the month, but for the moment, that's looking slightly ominous for the gold bulls, as is this weekly chart, which is, as you may remember, we thought was potential of a double bottom. The market seemed to be holding in here, supported by this prior high in 1917. If I just go to the specifics of that double bottom in the June contract, we have 1, 2, 1920, 1883. We thought they were good support, and so it proved. They were good support for a while. Now, last week they closed poorly, and they are pushing down through here. We need the close at the end of this week, but a close beneath 1883, I think, would be poor for the market. The market may yet jump up, bounce, but for the moment it's looking rather tricky for the market. And looking at the short-term chart, the price action basically is a bounce off this prior high 1883 in the June contract, as I say. So it bounced off it once, twice. It looked as if it did it again. It bounced clear of these, pushed up through the resistance from these, and failed miserably yesterday, and looks to be problematic today as well. So these levels need to be closely watched, but in particular, a weekly close beneath 1883 in the June gold contract would be bearish, no question. Thanks very much.